Good morning from Europe. This is Ahura, and we'll be with you with the daily market review and economic calendar checking. Like every day, we're gonna see what happened yesterday and today so far, and then we're gonna check the economic calendar for today and market reactions. Yesterday, central banks in Europe and Turkey, European Central Bank and Turkey, they had an interest rate decision and monetary policy meeting in Turkey. They surprised the market with the cutting the rates more than expected from 43% to 40.5, while the market was expecting 41%. That for sure that can support slightly the Turkish economy. At the same time, can put the Turkish lira under much more pressure. In Eurozone, then European Central Bank, as expected, they hold the rate at 2%, but at the same time, they increased the economic growth expectations for 2025 from 0.9% to 1.2%. In other data shows that the Italian bond yields declined while the Turkish consumer sentiment slightly improved. In Mexico and Brazil, retail sales and industrial production dropped. UK consumer sentiment eased, and jobless claim in the United States increased. That's one of the most important data which we had yesterday. Initial jobless claims increased to 263,000, much higher than 235,000 expectation, while the previous week also it was around 235, 36,000. That shows that the US labor market losing the momentum. In the United States, the inflation data also shows that the inflation eased slightly. Inflation increased slightly in monthly scale from 0.3% expected. It's increased to 0.4%, while annually also it's increased to 2.9% from previous 2.7%. However, the core inflation was steady at 3.1% with 0.3% monthly growth. In South Africa, we had just like mining output, overall mining output increased. However, the gold mining slightly eased. In Israel, consumer sentiment slightly, just like weakened slightly. In other economies, if we check in South Africa, also we had the same negative data from the consumer. South Africa's consumer sentiment also slightly eased, while manufacturing output also dropped. Germany's current account balance decreased. Russia's reserve and trade debt, trade debt and trade balance increased. In United States, U.S. natural gas inventories increased, while the Treasury yields for all 4 weeks, 8 weeks, and 30 years also is for 4 weeks. Bond yields fell to 4.06%. For 8-week bills, yields fell to 4%, and for 30 years bill that fell to 4.65%, much lower than 2 weeks ago, which it was 4.90 some and 79. And that shows that now the market counting on more rate cuts probably this year. U.S. trade deficit or budget deficit or federal budget deficit fell much more in August, showing that the government can have the more challenges with the lower income that they have right now. New Zealand PMI also slipped. In South Korea, consumer sentiment weakened. Continuing today with the data that we had so far, we had the Indian consumer sentiment also, which is weakening. Australian consumer sentiment slightly improved. Japanese consumer sentiment hold steady. Chinese consumer confidence improved in September, while industrial production in Japan fell. And the most important data which we had so far today, it was the UK economic data. UK construction output increased, service sector increased, but manufacturing and industrial production sharply they fell, and GDP was flat in July with 0% growth, while on the annual scale, GDP losing the momentum. But additionally, we can see that the UK trade deficit widened slightly in July, showing that the UK British economy is still facing with much more challenges. Later today, we're going to have mostly the inflation numbers from most European economies, but the important meeting will be the Russian central bank decision, which is going to expected that they cut their rates from 80% to 16%. Right now, the Russian ruble is moving so weaker against dollar and its reverse. With this data, we expect that the Russian ruble to fall further. Other important data, new loans today is supposed to be published. The data for the new loans is supposed to be published for China, and we expect to see more loans while the market, the government and the market both, they're trying to give them more facilities to businesses and private sectors. In Canada, we're going to have the building permits, while in United States, Michigan survey is going to be published today, later for inflation expectation and consumer sentiment and expectations. We expect a slightly weaker numbers from here. Russian GDP also supposed to be published for the second quarter. At the end of the day, US Bakery oil rig count and total rig count should be published, and after previous week's 414, increasing to 414, we expect slightly more increase for the previous week, while the CFTC's data for much more serious traders should be watched more closely. With this data, what's going on in the market? Checking with the Turkish lira after yesterday's Turkish central bank meeting, we can see that the Turkish lira still continues weaken against the US dollar. Now each dollar stays 41 point, almost 40 Turkish lira. After yesterday's European Central Bank meeting, also euro got slightly stronger as they didn't cut their rates. At the same time, the market in the United States, they are counting on more rate cuts. Additionally, as we said earlier, that European Central Bank, they increased their economic growth expectations from 0.9% to 1.2%. That can have the positive reaction in the euro. 1.18 is the next target for the euro. Markets risk with the VIX at 15.60 is so low, while the dollar index still under 98 marks moving. We expect to see the dollar index between 97 and 98 with this data. Gold printing new record high every day, new records. So with the small weaker dollar index that we had, at the same time we had more cautious in the market, with while the yields also sliding and moving down, so that all can support the gold trade and gold investment. Same trend we can see in the silver chart. Additionally, on the energy market, gas and oil prices, both of them, they are falling as the inventories increase. At the same time, we can see that the overall economic growth is under question and cautious. All of them, they can slightly push pressure on the oil and gas prices. However, about the gas, I should say that it's not going to be the negative reactions in the short term. Gas demand increasing, and we will have more demand for the gas, slightly for the gas, and gas price can increase. On the other hand, for the energy market, for the oil market, with the ongoing geopolitical tensions all around the world, we don't, especially in the Middle East and US, Russia and Ukraine, we can say that while the market expecting around $51 price for the end of this year, but however, all these geopolitical condition can put the markets on more cautious decisions. Stock markets, S&P 500, Nasdaq, and Dow Jones, all of them, they are printing new all-time high, and with this counting more on the bigger rates cost for this year, stock market still continues, and this positive trend still continue here. On the cryptocurrency market, in line with the positive reaction in the stock markets, Bitcoin also increasing, generally about 113. We told that about 109 it was the positive reaction, and about 113, as we mentioned before, we can count on more price hiking, increasing the prices. So that's, let's see and let's wait and see what's going to happen. Now the price trading above 115,000 US dollar for each Bitcoin. Okay, guys, that was the market recap and market update. If you had any other question, don't forget to write in the comment section. We'll try to get back to you as soon as possible. Have a good day. Bye.